Welcome back. Joining us for a look at the day's markets action is Caroline Cremen from AdviceWorx. Thank you so much for your time, Caroline. Quite volatile trading that we have seen so far this year, and even particularly in the last 2 days, because we had that strong bull run at the end of last year. That didn't really carry through to the beginning of this year, and we did see a kind of correction happening. But we saw a really strong rebound, particularly from Wall Street last night and the Asian markets. A little bit of positivity on the JSE, but you're looking at those European markets and those US, stock markets, those now back in the red. So things are pretty mixed at this point. What is fueling investor sentiment at this point?
Well, right now, nothing. And this is the reason why you're having ups and downs. You know, the market is really looking for a theme, whatever that theme is going to be. And right at this point, we had the Fed, the Fed's kind of more dovish stance at the end of last year that drove the rally. And we're looking for something now in 2024. There have been a few comments from some Fed officials. There are a couple of issues in China, but we're really still getting the real nitty-gritty, which will happen again at the Fed meeting at the end of January. I know we go from Fed meeting to Fed meeting, but it's going to be the same story this year. It's going to be, that was the story last year. This is going to be the story this year. And also, earnings have not started to come through yet. They'll only start to come through, I think, from the end of this week. We haven't seen updates yet from, Christmas sales from some of the retailers. So we're in a bit of a holding pattern at the moment. And I think this is where, one day one sentiment rules and the next day the next sentiment rules. So it's going to be like that for a few days.
And I mean, even in that short-lived rebound that we saw on Wall Street and also in the Asian markets earlier on, that was led by the tech stocks. And of course, we know even last year that those tech stocks were really the ones driving the rally that we saw. But I mean, it seems that after at least the first quarter of this year, things are going to start to look brighter. Do you think that we could start seeing a broadening out of, the bull run that we've seen so far?
Well, one would think so. I think really towards the end of October, I mean, most of the things, apart from those Magnificent Seven, were actually still in the red on a year-on-year basis. So they're only kind of coming back into their own in this last quarter. So I think there's two things at play here. I think, people have got a lot of money in money market funds. That was the preferred choice of investment last year for people. So it's the fear of missing out. So it is the dumb money. People saw the huge jump up in markets people kind of trying to time when they're going to go into market. They saw that huge jump up, and now there's worries that the markets have possibly moved against them. I think the smart money is kind of still keeping an eye on this and say it might actually be overdone. We've certainly seen comments from the Fed this week, in this last week, that have kind of toned down that more dovish tone that the Fed used in December. Now, I'm going to dispute the fact that the Fed was very, very dovish in December. I think they were very balanced. I think, unfortunately, what happened is that the markets took it very positively, possibly too positively, and we've seen a toning down, a lot of commentary from, I think it was from 3 different Fed officials, just putting a damper on that, and I think it's worthwhile paying attention to that if you're going to start to commit money into the market.
Funny enough that you mentioned dumb money. I finally watched the movie Dumb Money over the holidays. So I just had flashbacks there. Caroline, I mean, obviously we're waiting for that US inflation print that is coming out on a Thursday. And one of the big influences, of course, is the oil price. And there has really been this overhang and kind of nervousness of, how far the impact of that Middle East conflict, could go in terms of the oil price. But now you're getting Saudi Arabia cutting its prices to its Asian markets. Would you say that at this point maybe there's not too much to worry about in terms of the influence of oil on inflation, and that things are maybe fairly balanced at this point in that market?
Well, I think we need to just remember two things. Inflation is an issue, but so is economic growth. And if they're cutting the price into the Asian markets, that probably means they're worried about economic growth there, which is kind of bad globally. And they probably have a right to be worried. To try to figure out what OPEC and the Saudis in particular are going to do is is a case of futility. They really do move one way or another. It increasingly has become very political. The conflict in the Middle East right now, certainly does give more worries to the fact that they might actually be a little bit more political about the oil pricing changes that they do in the coming year. So I think it's definitely one of those black swan events. It certainly does have a big impact on South Africa's CPI figures. But from what the Fed does, the Fed obviously does look at the oil price and the impact of the oil price and things like that on their decisions. But they tend also to look more at the things that that they can control. Things like your services, your food prices, and things like that. So it's not going to be the only thing, and it's certainly I don't even think it's really the dominant thing that they look at when they decide if they're going to increase or decrease. But I think just the only thing we can take from the oil prices here and what the Saudis are going to do is that it's going to be interesting, because it doesn't appear as if this conflict is dying down anytime soon, and that's a big risk.
Indeed. Well, let's get to your stock pick for today, Caroline. What are you hanging your hat on today?
Well, I'm going to be quite long term, and we talked about the tech sector jumping, and part of the reason the tech sector jumped was because NVIDIA, the chip maker, talking more about AI chips and things like that. So one of our favorite stock picks has always been ASML. ASML is the Dutch company that actually manufactures the machines that prints the chips. This company is a wide moat. It is really the only company in the world that actually manufactures the machines that can manufacture those high-end chips. And these are the chips that are used in defense. They're used in artificial intelligence. They're used in your cars, your Teslas, and things like that. So I don't think this is a dripping roast right now. It is quite a cyclical sector. But if you're going to buy into the artificial intelligence theme, and I really do. You do need this company and the technology behind it. So buy into downswings when you get the opportunity. This is a nice stock for a long-term portfolio.
All right. Well, thank you so much for your time and for your insights on what has been driving the market today, Caroline. Appreciate it. That was Caroline Cremen from AdviceWorx.